Welcome. This is your daily dose of daily market wisdom with Master Trader Nick Santiago. I am Kerry Lutz. Today is 6/19/21, and this is show number 280. And we're coming to you on Saturday because, well, if you were watching the market and you saw what happened, you'll totally understand, especially gold and silver. Well, Nick, where are we now?
Well, we had a very, very big decline yesterday in a lot of the major indexes. It was a rare Friday sell-off, which we normally will get a rally, but all of the major indexes were down yesterday across the board, including the precious metals as well. They got hit. I mean, there really wasn't much that was spared. It was a broad-based decline. There were some bright spots out there. You had some spots in technology, more so the cloud software names. They hung in there pretty well. But it was a broad-based decline, and the Russell 2000 led that fall. That represents small-cap companies in the U.S. that broke below its 50 and 100-day moving averages by the closing bell. There's still a lot of technical support underneath, so we'll see what happens. Normally during an options X, we don't really get a big hit in the indexes. Individual names could fall a lot. Normally we don't see it in the indexes. This time around, though, we had a pretty good sell-off, especially in the Dow Jones this week, closing at around 33,290. And again, that took out its May low pivot. So definitely some damage done on the charts here. I think everybody needs to watch what happens this coming week. But we'll let the charts tell us a little bit more. If you get some bearish retraces or some bearish patterns out here, then I think this market's probably a short going into the latter part of July and August. So we'll see what we get out here overall.
Wow. So you think gold could retest its March lows then, huh?
Well, I think there was a lot of damage done on gold this week. Now, we have to see a little bit more because when you look at the gold chart, we're sitting at a 618 retrace. That's the pivot low from March of 2021 to the recent high that was made in June. And we're sitting right at a 618 retrace. So I think there's a short-term bounce in here for gold, but I don't like the way gold closed on the weekly chart. That was a very ugly sell-off. And if we get any kind of bearish indication, then gold could go down and test the March lows. But in the short run, we'll have to wait and see what we get next week as we are into a very, very big daily chart support level for gold futures.
Interesting. So, like oftentimes before something really bad in the economy and the world happens, you see the gold price get slammed, much like what happened in March. Are we looking at something like that maybe happening here?
I think there's a very good possibility of that. To be honest, Kerry, this is the 1 year of a decade. I have not really had a bull perspective this year. Now, last year I was very, very bullish. This year, quite the opposite, but I was rather amazed like everybody else that the markets have held up so much. I think there's been so much capital inflow from the central banks, printing $120 billion a month. The European Central Bank doing about the same. There's just so much capital in here. And if money starts to leave the stock market, with these guys printing, that's probably spelling bigger problems down the road. So I would definitely be a bit concerned here. But again, I think it's a good trader's market now, as you're really going to have to pick stocks. The easy money's been made where, you can just buy every dip. I think that's over. So this will be a trader's market going forward.
All right. Well, that's why you need a trading strategy now more than ever, I guess, Nick. When you see the PPT fail like it did yesterday, that's pretty major, isn't it?
Yeah, but I got to say, Kerry, I think this was a little bit orchestrated, too, by the central bankers. Yesterday morning, a lot of people don't realize this, but one of the Fed presidents, Bullard, came out and made a few comments. And he's the St. Louis Fed president, James Bullard, and he basically said, we see that there's rising inflation, and we're going to probably need several meetings to, before we could taper, but tapering is coming. And, when you make those kind of comments, that's certainly a bit hawkish, and you saw a big spike in the dollar. And we also know what the Fed said on Wednesday afternoon after their meeting there. Jay Powell basically said he's staying accommodative, and the dollar still rose and commodities got slammed and the market sold off. So, the market is saying now that the Fed is going to need to do something here as far as tapering goes. We're not really expecting any rate cut. That's a whole different can of worms. But, again, if you stop the tapering, that'll certainly affect the amount of liquidity in the system, and that's a negative.
Right. Well, it's interesting because they're kind of at their wits' end. We saw China doing this crackdown on commodity price inflation by basically price controls, which will no doubt lead to shortages because we know how economics works. And now you got the Fed jawboning, but the amount of action they can actually take to accomplish that goal, short of raising interest rates, what can they really do other than pulling a little bit of liquidity out, or as they say, draining the punch bowl, right?
Yeah, and here's the other irony of this whole equation is that bond yields are falling right now. I mean, the 10-year U.S. Treasury note yield dropped 6 basis points yesterday, finishing at 1.45%. Yields have been going sideways to slightly lower really since late March. And, that seems to be what's given technology the shot in the arm. But the dollar has really, really strengthened this week, and that's something I've been looking for. I just didn't think we'd see it during Options X, to be honest. But that was the dollar had a major move, U.S. dollar index now trading at around 92.32, and that was, coming from a low last month of around 89.50. So that's a big move for the dollar. Yields, though, are lower, and, that's something that we're going to keep an eye on as well.
Yeah, lower yields, so maybe the real estate boom is not quite over yet. I mean, I've been seeing the anecdotal stories about it, but certainly in Florida, it's got a ways to run.
Yeah, in fact, if you look yesterday, the real estate, we'll talk about the Homebuilder stocks. They actually weren't bad. You did have a couple sell-offs in Toll Brothers, but Lennar had a huge day yesterday. That was up $3.52. So on a day where things look dire, Homebuilders actually hung in there. D.R. Horton was up. The ITB, which is the U.S. Home Construction ETF, that's basically a Homebuilder ETF, that was up 30 cents. Not a big move, but it's still positive. But Lennar had a great move yesterday, up 3.7%. And it may not be over right now. So we'll be watching the charts. If you don't understand charts, this is the time to really start to do it and understand it. I'm going to be doing a free webinar down the road, Kerry, just for charting basics for anybody that's looking to get into it. So I'll be posting that up, and anybody that wants to take that free charting course. It's just going to be real simple, real basics, just to get people's their feet wet. But you're going to need to know charting now because the easy money flow, I think, is coming to an end.
All right, so free charting course, you can only profit by it. If you want to figure out how the big guys do it, how Nick has been so successful for decades, then you need to go to inthemoneystocks.com and take a look at the offerings there. The Twitter feeds, at ITMS, at Nick Santiago01, at Kerry Lutz. And Nick, we're on the road still. We'll be on the road till the end of next week, but we will update as much as possible, especially if there are any major moves like yesterday.
Absolutely. And again, sit tight. This is going to be one of those markets where you're going to need to have pattern recognition in the back pocket because this is getting real tricky and real slippery out here. The easy money road where everybody knows everything, the meme guys, all of these guys, that easy stuff is coming to an end. Now it's going to be a trader's market going forward.
All right. Well, that's it for today. Any questions, comments? Email is kl@kerrylutz.com. Nick, we will talk to you again real soon.
Thank you.
Like that.